Welcome everyone, this is Professor C.A. Rohit Shroff and I welcome you on behalf of GK classes. In this video, we are going to discuss RTP of May 2024 for the subject of Auditing and Ethics. Before we move ahead, we are going to cover a few discussions before going ahead with the RTP discussion. Firstly, a lot of students are not aware about what is the weightage, so we will discuss the weightage as prescribed by ICI. We will also discuss what is the paper pattern, because if you see the RTP as well as the MTP, they have not given correct incorrect. Thirdly, in case if you are in lack of time, you do not have sufficient time, what are at least bare minimum questions that you should cover in this particular RTP, because a lot of questions you have already covered in your class. So without wasting any time, let us jump on to our first discussion. What is the weightage as prescribed by ICAI? So now, for chapter number 1, this is inclusive of MCQs. Chapter 1, they are saying around 4 to 6 marks. Chapter 2, it is for around 8 to 12 marks. Now, this is going to be a jackpot because the chapter is very small chapter. Content is very less, but if it comes for 12 marks, that is going to be a jackpot. So, you should definitely focus on chapter 2 to score well. Chapter 3, discusses a very huge chapter, but weightage is again 8 to 12 marks. Chapter 4, again a very huge chapter which has a lot of standards, 8 standards to be very precise, 12 to 18 marks. Now, I am of the opinion that weightage may little bit increase for chapter 3 and 4 here. Chapter 5 and 6 together, that is audit of different items of the financial statement and documentation, together comprises of around 12 to 20 marks. Again, a very huge weightage, out of which chapter 5 will have more weightage and 6 may have one questions here and there. Chapter 7, which is a newly added chapter which has probably 3 new standards and 560 also has some additions, is for around 8 to 12 marks. Chapter 8, which is audit report, is again 8 to 12 marks. 9 and 10, that is audit of banks and different entities, is for around 12 to 18 marks. Again, a very good weightage. And lastly, your chapter number 11 is around for 8 to 10 marks. This is what is prescribed by ICI, what they have given in their document, and I have just copy pasted from there. This is what ICI is hinting. So this gives you a good view of which are the chapters you should focus more. Now, when we go to paper pattern, initially we had correct incorrect. Now ICI has no official announcement as such whether they will have correct or incorrect or not. But if you go through the RTP, when we go to the RTP, we will not find correct incorrect. When you go to the mock test papers, the mock test series 1 also does not have any correct incorrect. So the paper pattern that I am showing you again is not an official notification by ICI. It is as seen as the mock test paper. So in the mock test paper, it is divided into 2, division A, division B. Division A is MCQ, which is for 30 marks. But under MCQ also there is some change. Here they are asking more of case study based MCQs as compared to general MCQs. Earlier general MCQs were asked for more number of marks as compared to a case study, but however here they have 3 case study based questions and general questions are around for 6. Coming to the descriptive part, which is the major change, usually question number 1 was compulsory, which was nothing but correct and incorrect, which was a jackpot for you, my friends. But unfortunately here they are probably saying there may be no correct incorrect, no official announcement as such, but here there is no correct incorrect in the mock test paper. So out of 1 to 6, you can attempt any 5 out of 6. Every question is going to be for 14 marks. Internal breakup of this 14 marks, they will ask you 4 questions, A, B, C, D, 4 marks, 4 marks, 3 marks, 3 marks. So there will be 4 questions. So now, what to do for correct incorrect in case if you are a student who have already prepared correct incorrect, if you have already marked which are important correct incorrect, it will hardly take an hour. I would suggest you must go through those things. You never know, that will help you for other content as well. So I would suggest if you have already done through it, just go through it once. You never know, they may end up asking. So just go through it in case if you have already done it. Now in case when we go to RTP, more or less everything we have covered in the classroom. I will still suggest you listen to all those questions. It will help you as a revision. See this particular video when, for example, you are tired at the end of the day, you are done with your studies, you are not able to push yourself. You can just play this particular video and revise the questions. Try to pause the video. Okay, this is the question that we have already done in the class. What should the answer be? imagine the answer in your head and then look at the answer. In case there is a probability that you are not able to crack those answers, or you were able to but not with the correct language and with the correct content, then no problem, it is bound to happen. Revise it once again. So somewhere it is revision test paper, this is not your main exam test paper, this is revision. It is bound to happen that you might make mistakes somewhere here and there, so no need to stress about it. Revise whatever you can revise. But if you are in lack of time, you do not have sufficient time to watch this whole video as well or go through all the questions, then in that case I would suggest at least go through this question. Out of these questions also, there were a lot of content covered in the classroom, but you might find this little tricky here and there, and there are a couple of questions which if they have added, which was not there in the module, which was not there in a classroom discussion. So these are the questions which I would insist, out of 25 questions, at least go through this around 6 questions. This will also give you a good coverage. So without wasting any further time, let us jump on to main discussion, that is RTP discussions. The discussion is going to divide into 2 parts. Firstly, we'll discuss the MCQs and then we'll move ahead with the descriptor. For the MCQs, let us move ahead with the first case study. DSN Company Chartered Accountant as statutory auditors of SAR Industries Private Limited, a company engaged in business manufacturing since 2018. The company is operating from the rented premises and it does not have building of its own. It had upgraded its machinery last time in 2020. Except interest in this company, promoters, directors, key managerial person and their relatives do not have interest on ownership in any other entity. Also, the company does not enter into any business dealings with the promoters, directors, key managerial persons and their relatives. The directors and the key managerial persons get only reasonable remuneration from the company. Though the company has an internal control system in place, it has not appointed an internal auditor. So, company has no internal auditor. It is also not mandatorily required to make such an appointment under the Companies Act. So, under Companies Act also, there is no requirement for them to appoint an internal auditor. DSN Company have accepted the audit of the above company for the year 22-23 for the first time. Promoters and the directors of the company are known to engagement partner only socially for quite some time. However, it is for the first time that any type of professional work to this company has been accepted by them. While formulating the audit plan for the company, CAD engagement partner has planned certain risk assessment procedure and further audit procedure consisting of test of controls and substantive procedure in relation to the different areas. Following is the extract of the company's financial statement. They have given turnover, inventories, property plant, which is the gross block, the net block, gross profit and the trade receivable. PPE consists of machine only. While planning the procedures in respect of the property, plant, equipment, auditor has included audit procedures like inspecting, reviewing the company's plan for performing physical verification of PPE, assessing the depreciation method used, verifying the cost of PPE items acquired during the year and the bills and the recalculation of the depreciation. Further, performing the risk assessment procedure to identify ROMMS in the financial statement. Engagement partner has come to notice that there is a considerable variation in the gross profit ratio as compared to the last year. During the performance of substantive procedure, he has also studied data of purchase and sales of the company during the year under audit and also compared such data with the preceding years and the earlier years. Keeping in view, provided in the case scenario, which of the following is most likely to be appropriate? Engagement partner is known socially to the promoters and directors of the company. Situation mandatorily involves advocacy threat, casting doubt on the auditor's independence irrespective of this detection risk in the engagement is low. Second, engagement partner is known socially to promote the directors of the company. The situation involves familiarity threat. See, the situation reflected in the case scenario may not constitute a threat to independence, correct? But they are saying detection risk is low, which is not possible. Situation reflected in the case scenario may not constitute a threat to independence, correct? But irrespective of this, detection risk may be high. So, answer here is going to be D. Next, CAD included in the audit plan certain procedures in respect of PPE. Which of the following audit procedure included in the plan is not relevant? Inspecting and review the company's plan, this is relevant. Assessing the depreciation method, yes, this is also relevant. Verifying the cost of PPE item acquired during the year with the purchases. So here in this particular case, they are saying acquiring for purchases. Now if you see, what was the property plant gross block? 1.25, 1.25. So in this particular case, verifying the purchases may not be very relevant. Recalculation is relevant. So answer here is going to be C. Which of the following statement is likely to be most suitable to explain the fact that the variation in the gross profit ratio as compared to the last year? Firstly, the gross profit ratio has decreased in 22-23 as compared to the year 21-22. It may be due to the reasons that the sales price may have been reduced by the company to procure more. Yes, this is definitely can be the reason here. Next, CAD has also studied the purchases and sales data of the company during the year and has compared such data with the preceding year and earlier year also. What is this example? This is example of what? Trend analysis, where we are comparing this year's data with the previous year's data. So answer here is going to be B. Moving ahead with 1.5, considering the case scenario in totality. In totality, identify which of the following combination is not proper for their likely relevance in performing and completing the above engagement. Firstly, do we need SQC? Yes. Quality may always be required. Acceptance and continuance? Yes. 501 since inventory, external confirmation? Yes. Next, B, 550 related parties? Yes, required. 510, it is nowhere talking about initial audit engagement. 610, it is nowhere talking about the using the work of internal auditor. Hence, this may not be relevant. Next, case study scenario number 2. CAM Raja has accepted offer of appointment as an auditor of an entity. As the business carried on by the entity is new to him, he wants to gain an understanding of the entities and the environment, including the internal control. In this regard, he has performed procedures to obtain evidence about the design and implementation of relevant controls. He has performed various procedures like inquiry, inspection, observation in this regard. He wants reasonable assurance that the accounting system is adequate and that all the accounting information which should be recorded has in fact been recorded. Further, during the course of audit, he has noticed as under, as required by management, bank reconciliation is required to be performed monthly. However, the same is not carried out as stipulated due to the time constraint faced by the accountant. The entity has a system of procuring raw materials, supplies and the basis of the valid purchase order issued by the entity. However, purchase orders are not numbered in a sequence properly. Wage sheets are not verified by a responsible official as required by the management. Staff of the entity is responsible for bringing cash from the centers in the nearby areas to the entity's premises from where it is deposited into the entity's bank account. However, the concerned officer has not renewed insurance for cash in the transit. Based on the above, answer the following questions. The auditor has performed procedures to obtain evidence about the design and implementation of controls. Which of the following procedures is more reliable to obtain evidence regarding application of control? What can help us? Observing of the application of the control? Yes, sir. See, we want evidence about the design and implementation. So obviously observation can help. Inspecting the document, no. Inquiring of the application, studying the design, the most appropriate answer would be observing the application of the control. Second, examination and evaluation of internal control is indispensable for CAM Raja. It provides necessary comfort relating to completeness of accounting information. However, review of internal controls of the entity will not enable him to know what? Firstly, A, whether errors or fraud are likely to be located, whether effective internal audit is in operations. Second, whether his opinion requires modification, whether administrative control has a work. So here in this particular case, he has done an examination of what? internal control. But this will not help him to decide whether any modification is required. It will definitely help him identify what errors and frauds are likely to be located. It will help him understand whether the internal audit department is operating effectively. It will help him to understand why administrative control has bearing on his work. But however, it will not help us to determine whether he needs to modify his opinion. As regards weakness identified in the control system, which of the following represents deficiencies in the internal control? Not performing bank reconciliation and not verifying wage sheets by the responsible official. Not performing bank reconciliation timely and lack of proper sequence. Not performing bank reconciliations timely, lack of proper sequence of purchase order, not verifying the wage sheets by the responsible official. All of these are what significant deficiencies. Lack of insurance for the cash transit only is not a deficiency in the internal control. Last, which of the following is the most appropriate regarding the responsibility in accordance with 265? What is 265? Communicating significant deficiencies in the internal control to those charged with governance. To communicate significant deficiencies in internal control to management? No. To communicate significant deficiencies in the internal control along with their explanation to the management. Next, to communicate significant deficiencies in the internal control along with explanation of their potential effect. To provide sufficient information to understand the context of the communication, management, and express opinion on the effectiveness. No, we do not wish to express an opinion here. To communicate deficiencies in the internal control along with their potential extent to sufficient information to understand the context of communication to the management. So we want to communicate deficiencies in internal control with explanation of their potential effect. What can be the impact on the financial statement? So this will help them to understand. So this is what answer here is going to be D. So with this we are done with both the case studies. Moving ahead with the general MCQs. CA Muskan is auditor of two concerns, Wellstar Homes and Wellstar Stores. The partner of the both firm are common. While auditing the financial statement of Wellstar Home, she has noticed that few expenditure bills pertaining to the Wellstar stores have been entered into the books. Which assertions of the Wellstar Homes is disapproved in the above situation? So, in the financial statement of Wellstar Homes, we have the transaction of Wellstar stores. So, has the transaction actually occurred during the period? No. So, here, which particular assertion is impacted here is occurrence. So, answer here is going to be occurrence. Next. CX is nearing completion of audit procedures. During the course of audit of a company, he has found nothing unusual till now. Company is earning handsome profit since last many years and there is a little debt burden on it. It is also in the process of expanding its business by taking loan from a bank. The bank has also granted in principle approval for lending money to the company. Which of the following statement is most appropriate in evaluation of the going concern? So do you think so? There is a problem here. So appropriateness of the management assessment in relating to going concern assumption may be made by the auditor without performing detailed evaluation. So yes, we need to check whether the going concern is appropriate. Though the management has made the assessment, we are also supposed to make the assessment here whether the going concern is appropriate, but no detailed procedures are required. CA Piyush is offered appointment as statutory auditor of a branch of a bank. He is also taken loan of 75 lakhs from the same bank. Which type of threat is this? Self-interest threat. Okay, so if you have taken loan or given loan to the client, it will be self-interest. A chartered accountant finds during the course of statutory audit of a company that a management is not serious about findings of the internal audit report. No action has been taken on the findings of the internal audit for the last 2 quarters. Quarters are gathering dust. He has further found that the management has not disclosed information relating to transaction with another party. However, he has gathered that it is a related party by going through annual reports of the past year and searching online database. So he was very smart enough. What he did was he went through the past year's report. He went to the online database of the MCA portal, What is depicted here? So what he's having is professional skepticism. He was alert and questioning mind, and he has identified evidences from alternative sources. Next, you have been appointed as statutory auditor for the first time. It has been very important that you understand the company and its environment. Which of the following activities are not expected to be included in your attempts to know about the company and its environment? A. Gaining knowledge about the debt structure. Second, evaluating whether the company's accounting policies are appropriate. We need to. Which of the following are not expected to be included? This will be included. Understanding the business risk. Yes. Gathering evidence about the valuation of the trade receivables. So here particularly we may not require evidence about the valuation of the trade receivables, hence the answer here is D. So this was the MCQs. We discussed 2 case studies and as well as the general MCQs. So chapter number 1, M Motors Limited is a leading Indian automobile manufacturer with many offerings across commercial passengers and electric vehicles. The company is pioneering India's electric vehicle transmission and enjoys considerable advantage in one of the largest growing automobile markets. GR and Associates have been appointed as statutory auditors for the year 2023. J&K are newly appointed audit assistants in the firm and are part of the engagement team constituted for the purpose of audit of M Motors Limited. However, they are confused about what such an audit ends to achieve. They perceive audit as guarantee against the possible errors or frauds in the financial statement. Do you agree with the perception of both the assistants? In this context, outline the objectives of independent audit conducted in accordance with the standards on auditing. So here they are asking us about what is the reasonable assurance. We have already studied this. We have already studied what are the objective as per SA 200. We want to obtain a reasonable assurance that the financial statement as a whole are free from material misstatement, and we want to report on the financial statement. They have further explained what do you mean by reasonable assurance. Reasonable assurance is a high level of assurance. However, it is not an absolute guarantee. It is not an absolute assurance, it is high level of assurance. So they have given a further clarification of what the objectives are. Second question, standards on auditing apply in the audit of historical financial information, whereas standard on review apply in review of historical information. Explain in detail giving the example. So here what basically they are asking you to trying to ask you what is the difference between the audit as well as the review. So here what is the difference between SRE and review? SA is applicable to the audit, whereas SRE is applicable in case of reviews. In case of audit, we are trying to give reasonable assurance. However, in case of review, we are giving what? Limited assurance. So again, our answer that we have already studied. Here they have given example of what are the examples of standard on auditing and examples of what are the standard on review engagement. So chapter number 1 was comparatively manageable. However, the analysis of the definition that they have given here was something that you need to refer once. Next, chapter number 2, audit strategy, planning and programming. Preliminary engagement activities include certain activities to be performed by the auditor while planning the audit. So they are asking about preliminary engagement activities. Discuss such activities. So under preliminary engagement activities, we need to consider whether we need to continue or accept the client relationship, that is, we'll see whether we are competent, whether we can comply with the ethical requirement, understanding the terms of engagement that we do under SA 210. The performing preliminary engagement activity assist auditor in identifying and evaluating effects or circumstances that may affect auditor's ability to plan and perform the engagement. Next, question number 4 is an interesting question. What I'll be doing is I'll be marking a few star marks out of the whole RTP. Make sure at least you go through the questions that have made a star mark against. Question number 4. The assistant of CAK is assigned responsibilities of drafting audit program relating to the purchase in appearing in the financial statement of the Broad Industries, a partnership firm. The said firm is a GST registered taxpayer and is engaged in manufacturing of packing boxes for a special type of paper taxable under GST. Help him understand by drafting a sample audit program for purchases. So they are asking us to draft. So whenever you draft, what you should do is, firstly, you write the name of the concern. So firstly, what you will write is name of the concern. After that, what will you write is the financial year, for which year are you doing it. Then it is prepared by which person, who is going to review it, and who is going to approve it. So once again, quickly, whenever you draft a program, first you will write the name of the concern, you will write the financial year, who has prepared it, who is reviewing it, and it is approved by whom. Then you will write what are the procedures. For example, for purchases, we will vouch for a few invoices. Second, we will trace the invoices into the accounts of the books of the concern. So we will trace the invoices. Thirdly, we can verify the purchase against the GST portal. So for example, if you have filed, you have applied for the purchase, someone else might have sold it. So the GST returns, you can compare the both and trace the few purchase invoices of a paper in records to ensure that this have been added to the stock of raw material. So whether the same purchases have been added to the stock of raw material, we can check the warehouse registers, whether it has been added, we can check the goods receipt notes, and we can write all those procedures as well. So here we will also write the extent of checking. What do you mean extent of checking? What will be the sample size? What is the basis of sample? What will be the method, and who has done it? So these are the points that we can add it here. So again, I make sure you refer this particular question. So we are done with two chapters. One is nature, scope and objective, and the second is audit strategy, planning and programming. Moving ahead with the risk assessment. Sataranga Foods Private Limited is engaged in manufacturing of pickles. The auditor of the company have planned audit procedure in respect of recognition of revenue of the company. Despite that, there is a possibility of misstatement in the revenue recognition are not identified by the planned procedure. Once again, despite there is a possibility that the misstatement in revenue recognition are not identified in plus, identified that particular risk in detail. So here the risk is what they are talking about is the detection risk. So detection risk has two components. One is sampling risk and one is non-sampling risk. If you recollect, we had discussed this while we were doing the basic concept. If you have the notes that we have made in the class, you can go to the basic concept number 5. We had discussed detection risk. What is the detection risk? That auditor may apply his audit procedures. In spite of that, auditor may not be able to identify a misstatement is a detection risk. Again, it has two components. One is sampling risk and a second is non-sampling risk. What is non-sampling risk? That the auditor may reach an erroneous opinion for any reason not related to sampling. If you go to the books, we had also written the sources of non-sampling risk. For example, human mistake or applying audit procedures not appropriate to the circumstances, or maybe misinterpreting the results of the sample. So the question was talking about the detection risk. Next, this question we have already covered in our content. IT risk can have impact on audit. In what different ways such risk can have an impact? So it can have impact on what? This can have impact on my substantive checking, because we cannot rely on the data that is obtained from the IT system. It will also have impact on my controls. If it has impact on my substantive checking in my controls, then definitely it will impact my reporting as well. So this is called as IT related risk. Next, chapter number 4, more or less all the questions here we have already covered. These are basically the module question itself. So very briefly, let us go through chapter number 4. Chapter number 4 is very important from the exam point of view. The weightage is quite high. CA Kanika audited books of accounts of Engineering Limited for the financial year 22-23. The auditor used an audit procedure according to which all the documents and records maintained by the company were checked in detail to obtain evidence. Explain the audit procedures used by the auditor. So which procedure have they applied? What they have done is inspection. So what is the procedure when we check all the documents related to the records? This is nothing but inspection. They are asking comment on the reliability of the evidence obtained. So here inspection involves examine the records and documents, whether internal or external. Inspection of the records and documents provide evidence of varying degrees of reliability. Reliability will depend upon the multiple sources, whether the sources were internal or external, whether there were any controls over the production of that particular data. So the answer here is inspection and the reliability. So mark this important as well. So far, which are the questions that we have marked important? Question number 1, question number 4, question 5 and question number 7. Question number 8 is exactly a question of module that we have already studied. Let us go through this. CAJ is conducting statutory audit of Gemini Limited engaged in the manufacturing of pharma products. The company is fairly large one and a well functioning internal audit department. While considering sending out external confirmation requests to trade receivables outstanding on the date of the financial statement, CAJ has delegated the entire process of choosing trade receivables, designing and receiving responses from the customers to the internal audit department. So they have delegated this to whom? Internal audit department. The responses are also received on the mail ID of the internal audit department. Is the approach of CAJ proper? So no, you cannot delegate this to the internal audit department. You need to have a control over the whole confirmation procedure. So answer that you will have to write here is the external confirmation procedure. We need to have control, that we need to determine the information to be confirmed. We'll have to select the confirming party. Then we will design, and lastly we send a request including the follow-up request. So the question that we have already covered. The newly appointed auditors of BTN Limited wanted to obtain sufficient and appropriate evidence whether the opening balances contain misstatement that materially affect the current period financial statement. So you need to write procedures that we have studied under SF 510. So this question was on SF 505. This was on SF 500. So this is a basic question that we have covered, that what is the audit procedure, determining whether the prior period balances have been correctly brought forward. Opening balances reflect the application of the accounting policies, performing one or more of the following. What is the mnemonic that we used to use? BAP. B is balances have been correctly brought forward. Opening balances, application of the appropriate accounting policies, performing one or more of the following. Next, SPR Limited has been into the media business since 2001. During the financial year 22-23, many notices were received by the company for hurting public sentiments, and financial claims were filed against the company. As an auditor, you requested the management for arranging meeting with the company's external legal counsel. Management is of the view that such meetings are necessary in certain circumstances. List down those certain circumstances. So this is 501. When can you meet the external legal counsel? When there is a significant risk, the matter involved is complex, there is a disagreement with the management and the external legal counsel. Only in those scenarios we will meet. So again, a question that we have covered. So basically, except for question 7, the questions here were already covered. So a lot of interesting questions here in chapter number 5. Rather, I would say all the questions here you must definitely go through. Somewhere ICAI is focusing on this chapter. Expect good number of questions out of chapter 5. A lot of students usually skip this chapter, but I'm optimistic that chapter 5 and chapter number 5 will have a lot of questions in this particular attempt. Now, here you will require a few concepts of your schedule 3, but do not worry, I will cover these questions assuming you are not aware of what are the requirements of schedule 3. Now, proceedings have been initiated against Falls Limited for holding Benami property. What is Benami property? You have understood this under Caro. That is, the company is, basically the beneficiary of the property. But however, the property is not held on the name of the company. It is held on some other party's name. Under law and regulation to prohibition of Benami transaction and rules made thereunder. But such property is not recorded in the books of accounts. As a consultant of the company, what will you advise the company as far as disclosure requirements are concerned in the financial statement? So what are the disclosures that you are supposed to give for holding a Benami property? So you need to give details of the property. What is the year of that acquisition of that property? What is the amount of that particular property? Details of the beneficiary. If the property is not in the books of accounts, the fact shall be stated with the reasons. Where there are proceedings against the company under this law, a better of the transaction or the transferor, then the details shall be provided. And lastly, the nature of the proceeding, status of the same, and the company's view on the proceedings initiated against them. So these are the disclosures that we need to give for holding a Benami property. Next, question number 12. Droma Shoes Private Limited was established in the year 22-23 for manufacturing of footwear. As funds were needed to carry on its business activities, including for purchase of different raw materials, incurring of regular expenses like power and fuel and payment of wages, etc., it got a sanction of the credit facility amounting to rupees 2 crores repayable on demand from a bank against the primary security of its current assets and collateral security of residential house of one of its directors. Duly signed, the guarantee documents by the directors in favor of bank also form part of the bank's loan documentation. Account statement of the above facility downloaded from the bank's website shows a debit balance of rupees 1.85 crores on 31st of March. The operations in the above credit facilities are satisfactory. In this regard, identify the nomenclature of such credit facilities. What is this credit facility? This is nothing but cash credit. How would the amount of 1.85 reflected and classified? It will be classified as what? Short-term borrowings. Now also state the specific disclosure requirement of the Schedule 3 of the companies in relation to the above. So let us go through the answer here. So this is nothing but what? Short-term borrowing should be treated as cash credit facilities or the overdraft. Now, what are the requirements of the Schedule 3 disclosure requirement? Firstly, we need to give the nature of security. The primary security was nothing but current assets. The collateral security was house that was belonging to the director. Next, the loans have also been guaranteed by the director. Apart from this, what are the additional regulatory information that we need to give? We need to state whether quarterly returns of the statement of current assets are filed by the company. If you remember, we had discussed this while we were doing Caro. If not, a summary of reconciliation and reasons for material discrepancies, if any, to be adequate, has to be disclosed. So this was requirement of the Schedule 3. Next, question number 13 again also is focusing on Schedule 3. Following is the extract of notes to accounts of the financial statement of STU Private Limited listing some ratios. Discuss whether the disclosure given in the following manner meets requirement of Schedule 3 of the Companies Act. Ignore the other ratios which are not listed in the above. So now they have given the ratios. What is the requirement of Schedule 3? Whenever you give a ratio, you need to state what is included in the numerator as well as denominator. Here they have not given any such disclosure. Also, if there is a variance in the ratios by more than around 25%, we need to explain those variances. So now let us go through the answer here. As for the Schedule 3, does not meet the requirement. Schedule 3 requires that you need to give the numerator and denominator. Further, explanation needs to be provided for changes in the ratio by more than 25%. Now see, if you see the current ratio, from 2.3 it has gone to 2.5. So the variation is how much? 8.69. From this has gone from 6 to 3. So for example, here 50% variance is there in the ratio. Next, if you see from 5, it has gone to 1.75. Again, there is almost 65% change. Here from 10, it has gone to 30. So it has been 30% change. So in all these three cases, it is greater than 25%. We need to give the explanation for the same. So there is a change in the inventory ratio, trade receivables, more than 25% compared to the preceding year. Therefore, explanation for such changes also have to be provided, which they have not provided. Hence, that is not in accordance with the Schedule 3. So all the questions of this particular chapter were wonderful. You must definitely go through. Next, question number 6 is a manageable topic. CA Rajani, a CA student, has understood that 230 requires auditor to prepare audit documentation on timely basis. While reading about SQC1, she notices that the time limit for completion of the final audit file is not ordinarily more than 60 days after the date of the audit report. She finds it to be puzzling. Unable to comprehend, she seeks your guidance. Guide her. So what she's asking is, okay, we need to complete the audit documentation. Yes, this is the requirement of SQC, that once the audit report is made, you need to compile it in one, you need to have an assembly in the file maximum within 60 days. This is basically an administrative process. So SQC SA 230 requires the preparation of the audit documentation within 60 days after the date of the auditor's report. Completion of the assembly file after the date of auditor's report is only an administrative process and does not involve a performance of the new procedures. Therefore, auditor shall prepare documentation on which basis? Timely basis. However, for completion or assembly of the final file, which is an administrative, time of period 60 days after the auditor's report has been required by SQC. So basically they have explained what is this particular process, which we have already discussed while we were doing chapter number 6. Question number 15 also we have already covered. Discuss what is the meaning of completion memorandum. Completion memorandum is nothing but basically summary of all the documentation they have done. It helps us in reviewing the work. It helps us in evaluating the work. So out of the all documentation we have done, we will make a summary out of it, which is called as completion memorandum. So this was our chapter number 6. Moving ahead with chapter number 7. CAK is statutory auditor of DEMA Private Limited for the year 22-23. Company has 3 plants in India. He is nearing completion of audit procedures to the financial statement for the year under audit and is yet to sign the report. Meanwhile, a huge fire broke out in one of the plants located near Nashik on 25th of June, damaging substantial part of the machinery and work in progress, resulting on loss of 5 crores. Unaware of the incident, he is in the process of finalizing the report in the first fortnight of July 23. State few audit procedures to be performed by him to obtain sufficient and appropriate evidence for identifying such events. Also explain auditor's responsibility in such situations. So this is technically they are talking about what? SF 560. What are we supposed to do? What is our procedures? Inquire the management, read the minutes of the meetings of those charged with governance, read the latest interim financial statement, will obtain a written representation. So this is what we have already covered, nothing new here. It's the same answer that we have discussed in the class. Next, Kundan, a CA student, is part of the engagement team conducting audit of an entity. The audit procedures are nearing completion. He notices that engagement partner has asked for a cash flow from the management for the next 12 months from the date of financial statement. Discuss the likely purpose of engagement partner in the above situation. Elaborate significance of testing being made by the testing being performed by the engagement partner. State 2 procedures in relation to cash flow forecast. So this is SA 570 that we have already discussed. What are we going to do? We are going to evaluate the reliability of the underlying data. We will determine whether there are adequate support for the assumptions that they have done. So here everything was in context of SA 570. So I'm not wasting your time on questions that we have already discussed. This is SA 570 that we have already covered. Next, chapter number 8, again you will find it very easy because we have covered a lot, probably all the questions in our classroom itself. Mention examples of circumstances where the auditor may consider including an emphasis of matter. So this is SS 706 where there is a impact on the going concern, or there is a exceptional litigation going on, a subsequent event, early application of a new accounting standard, or a major catastrophe that has occurred or continue to occur. This is what SA 706, that is where do we use an emphasis of matter para. While conducting the audit of an entity is facing following issues. He has not been provided with necessary support for attending inventory count process at the end of the year. The accounts manager is not providing him present address of the customer as well as suppliers for sending external confirmation. Email IDs have not been provided to the pretext of the business. He was not able to verify revenue of the entity due to lack of the complete details. He has been asking for bills of sample basis for the purpose of verifying expense, but our staff has been making lame excuses. So it is hinting that auditor was not able to obtain evidences. The matter was brought to the knowledge of the higher management, but of no avail, as they did not also respond to the same. CIS has come to the conclusion that possible effects of the financial statements of undetected misstatement would be material, and many aspects of the financial statement in such case, a qualification on the opinion would be inadequate to communicate the gravity. What should the auditor proceed in such a situation? So here in this case, we may have to consider the possible effect. So if the auditor concludes that the possible effect of the financial statement of undetected misstatement could be both material and pervasive, so that qualification would be inadequate, he should consider whether he can withdraw where withdrawal is permitted under law and regulation. However, if withdrawal is not possible, then in that case we will disclaim an opinion because we do not have psi and the matter is material and pervasive. However, if the auditor withdraws, he shall communicate with TCWG, and matters regarding the misstatements identified during the course would have given a rise to the modification. So this was our essay 705. So with this, we are also done with our chapter number 8. So comparatively, chapter 6, 7 and 8 are comparatively manageable chapters. Now again, chapter number 9, which again I think so is an important chapter. Mark this whole chapter important. Pilfering is one of the greatest problems in any hotel, and the importance of internal control cannot be undermined. Explain. So firstly, we need to understand question number 20 mein, what do you mean by pilferage? For example, let us say in case of a hotel, what is pilferage? It is small kind of a theft. For example, let us say the chef ordered for, let us say, 100 avocados to make guacamole. Let us say 100 avocados were ordered, but however he recorded that only 90 are received and 10 he took away. Every avocado costs somewhere around 100 rupees. Even if he takes away 10 a day, he will earn rupees 1000 only out of this. For example, let us say for the whole month around 200 kg of rice was ordered, but however he recorded that only 180 kgs is received. 20 kgs he will sell it in the market for n number of things. For example, the shampoo and everything that you take away from the hotel, he will show that somewhere around 500 shampoo bottles were received, whereas 600 bottles were received. 100 bottles will sell it in the market. That is the reason why they state that it is not for sale, it is only for the hotel purposes. This is called as pilfering. So pilfering is one of the greatest problem in any hotel, and the importance of internal control cannot be undermined. So what do we need to do in this? In this case, we should have what? We should have internal control system, a strong internal control system which will help us prevent the pilferage. So for this, what we can do is we can have kitchen order tickets. Let me show you a small video for this. You will understand. Now if you see here, this yellow color bills are nothing but the bill paid that is on the cashier's counter. Now if you see the white color things, this is nothing but the order taken, kitchen order tickets that were generated. So now when you go to a ODP and you order for a Italy, he will go to the chef and give this particular ticket to that particular chef. As soon as he has prepared, he will punch that okay, this particular one plate of Italy vada is made. Now at the end, the bill is made. Now in the bill, for example, he will make a bill of 1 plate Italy vada. Now for example, you have ordered for 5 plate Italy vada. The waiter again went to the chef by prepare 5 plate. As soon as he prepared 5 plate, he punched the same. But during billing, the bill was made only for 3. Let us say for example, for 3 he made you pay via the card. For the remaining 2, he took a cash from you. So that 2 plate Italy vada is unaccounted. Yeah, that 2 plate is what? Unaccounted. So hence, what as an auditor we can do is, we can take kitchen order tickets, all the bills made, compare both. Okay, for example, your 5 plate Italy vada, your in bill also 5 plate Italy vada. Okay, internal controls are strong. Now there is no problem. But however, if I say kitchen order tickets, there is 5 Italy vada. However, let us say billing is done only for what? 3 Italy vadas. We will understand that there is some misstatement here. So for pilfering, what we need to do is, pilfering is one of the greatest problems in any hotel, and the importance of internal control cannot be undermined. It is the responsibility of the management to introduce controls which will minimize leakage as far as possible. Evidence of their success is provided by preparation of regular, perhaps weekly, trading account for each sales point and detailed scrutiny of the resulting percentages with a deviation from the anticipated form being investigated. The auditor should obtain this regular trading accounts for a period under review. Second, The auditor should verify restaurant bills with reference to kitchen order tickets, what we just discussed. This would enable the auditor to ensure that controls regarding revenue cycle are in order. Thirdly, the auditor should satisfy that all the tax collected from the occupants on food and occupation have been paid to the proper authorities. So we need to make sure that taxes have been paid to the appropriate authorities. Lastly, if the internal control in a hotel is weak or perhaps breaks down, then a serious problem could exist for the auditor. Lastly, as a result of a scope of test, it will be increased. In case if the risk is high, my checking will increase, and in the event of material margin discrepancies being unexplained, he will have to consider qualifying his report. So there are 5 points that we'll be writing here. First point was just explaining that somewhere if there are leakages, it will impact my work. Then we can check the kitchen order ticket. We will have to check whether the taxes are paid to the appropriate authorities. If the internal controls are weak, my NT will go up. And lastly, in case if these things are unexplained, I may have to modify my opinion. So this was pilferage. Next, question number 21. This question, rather than being an auditing question, is more about accounts. They are asking you, what do you mean by operating lease and finance lease? So from the lessee's perspective, whose perspective? Lessee. That is the person who's taking an asset on lease. Highlight main difference between operating lease and finance lease. See, operating lease is basically kind of a rent. For example, if I've taken an asset on lease, I will be paying rental. The asset ka ownership is not going to transfer to me. However, in case of finance, what I'm going to do is asset ka ownership is transferred to me. I am paying them the lease. At the end of the lease, the asset ka ownership will be transferred to me. So what is the difference between the two? If we talk about accounting treatment, operating lease is treating like a rent. The lease payments are operating expense and asset does not appear in the asset in the lessee's balance sheet. However, in case of finance, it is to be treated as a loan. So when we talk about operating, this is renting. However, in case of finance, it is nothing but a loan arrangement. So here the ownership of the lessee and thus appears in the balance sheet of the lessee. So it will appear in the balance sheet. Next, when we talk about tax benefit, for operating lease, it will be treated as an expense. But however, we cannot claim the depreciation. Why? Because the lessee is not the owner of that particular asset. However, in case of finance lease, we can claim both the interest as well as depreciation, because interest is an expense. And since the asset is shown in the asset side, we can claim the depreciation as well. So this was our lessee. So this question again, this was basically based on your AS 19. It was more accounts based question rather than audit based question. Next, chapter number 10. That is audit of banks. A chapter a lot of times students are really scared of, but trust me, this is one of the easy chapter. It is just that the chapter ka volume is huge, it is humongous. If you divide the chapter in 4 or 5 relevant parts, it will be very easy for you to score in this chapter. Now, audit of banks, question number 22. While conducting the statutory audit of branch of a nationalized bank, it is noticed that CAZ that the credit facilities granted to a borrower consisting solely of the term loan have been classified as substandard during the year 22-23 due to failure or non-payment of EMIs. Such EMIs were outstanding for more than 90 days. And the account was classified as substandard. Is it correct? Yes. So see, if it is outstanding more than 90 days, it will be NPA. If it is NPA for less than 12 months, it's to be treated as substandard. So they have correctly classified. CAZ has also agreed to the above classification. So above classification, CA also agrees. So what is the question here? What are the CAZ's responsibility regarding the verification of compliance with income recognition norm? My friends, if you recollect our lecture, I told you income recognition is a frequently asked question. So here in this case, what should be the income recognition? So if we have already accrued the income, we will have to reverse the income. So here we are going to talk about what reversal of income. So RBI norms stipulate if any advance account becomes NPA at the close of the year, entire interest accrued or credited the income in the past should be reversed or provided for. So if we have accrued, we will reverse the same. Not only that income, any further income, for example, fees, commission, or any other similar kind of income which we are going to receive from that particular person will cease to accrue. So in respect of NPS, fees, commission, and other similar income that have accrued should cease to accrue in the current period and should be reversed or provided for with respect to the past period if uncollected. In the given case, accountant has turned substandard asset, which is a type of NPA. Therefore, auditor should make compliance of the above norms relating to the income recognition. So this is exactly that we have already studied. It is there in the notes. You already are aware about it. No need to do it from here. But however, chapter 9, both the questions you will do it from here. Next, question number 23. A very simple question. It is basically against an accounts question. So if there are students who had already appeared for November 23, you will find this very easy. Why? Because you had accounts of banks in your accounting, but all the students are appearing for the first time in May 24. Just go through this question once. Now, while verifying the provisions of advances of branch of MCO bank as part of the statutory audit, CSZ notices that credit facilities consisting of the term loan to KRT Enterprise have been classified as doubtful, that too in D1 category. The outstanding balance in the above term loan account as on 31st of March is rupees 50 lakhs. Value of the security held is rupees around 40 lakhs. The branch has made a provision of 7.5 lakhs. Is the provision made appropriate? So this is classification of NPA and provision. For example, let us say if the asset is classified as doubtful, we'll have to divide this into two. Either it is unsecured or this is secured. If it is unsecured, we will make a provision of 100%. If it is secured, in case of D1, that is up to 1 year, we make a provision of 25%. Okay, up to 1 year. For D2, we make a provision of 40%. That is 1 year to 3 years. D3, we make provision of 100% if it is more than 3 years. Here the question is focusing on what? D1. Now, out of this, if you see, the total borrowings was of 50 lakhs. But however, they had security for around 40 lakhs. So, out of 50 lakhs, so 40 lakhs is secured. 10 lakhs is unsecured. The outstanding balance is 40 lakhs. The provision of the account held in the account is 40 lakhs. Security is 40 lakhs. Now, how do we make a provision? For secured, we make a provision of how much? We'll make a provision of 25%. What is 40 lakhs into 25%? 10 lakhs. For unsecured, we will straight away make a provision of how much? 100 lakhs. And you mean 100%, that is 10 lakhs. So total provision has to be somewhere around 20 lakhs. Now, if you see the answer, the outstanding balance was 50, value of the security was 10, so unsecured portion is 10. So now for the secured part, that is for 40, we'll have 10 lakhs, but however for unsecured parts, we'll have 100%, that is 10, so total comes to 20 lakhs. So just go through this question once, not very difficult, very manageable, but still go through once, so you are in a better position to solve it. Moving ahead with the last chapter, that is chapter number 11. Ethics and the terms of audit engagement. CAX has been offered financial statements of TDK Industries, a partnership firm. Prior to accepting the proposed offer, he insisted upon obtaining agreement of the management regarding acknowledgement of its responsibilities for having process in place to ensure financial statements are free from material misstatement. Can we ask for such an agreement? Yes, it is part of the precondition in SA 210. However, management is of the view that it is the duty of the auditor to detect misstatement in the financial statement, and such an insistence by the auditor is totally uncalled for. So when we are asking them to give it us in writing, they are saying you cannot ask us whose view is proper. Obviously, it is the view of the auditor that is proper. Also discuss reasons for arriving at your conclusion. What would be the likely proper course of action of CAX in case if it does not agree, I will not accept the audit. This is one of the precondition. What were the precondition? Determine whether the financial reporting framework is acceptable. Second, obtain an agreement from the management regarding the responsibilities for preparation of financial statement, internal control to provide auditor with access to information, access to additional information and unrestricted access to persons within the entity. If they do not do so, we will not accept the audit. So SA 210 deals with auditor's responsibility in agreeing to the terms of audit engagement. This includes establishing that certain precondition for an audit, responsibility for which rest with the management and where appropriate TCWG. The objective of the auditor is to accept or continue an engagement only when the basis upon which is to be performed has been agreed. The establishing whether the preconditions are present, confirming a common understanding between the auditor and the management. One of the preconditions is to obtain agreement for the management that it acknowledges and understands its responsibility. In the given situation, they have not, and hence the view of the management is incorrect, view of CAX is proper. In case the management does not provide an agreement, the auditor shall not accept the proposed engagement unless it is required by law and regulation. So this was a basic answer that we have covered under SA 210. So a manageable question. Last question. SA 220 is premised on the basis that this firm is subject to SQC1. What do you mean understand by this? If you recollect, SQC and SA 220 both were made for what? Quality. But what was the difference between the two? SQC was applicable to audit, review, assurance as well as related service. However, SA 220 is applicable only and only to the CA firm. So somewhere SA 220 is premised on the basis of SQC. See, SA 220 is applicable only for audit. But like SQC is applicable for audit, review, assurance and related service. SQC is applicable to my entire firm. But SA 220 will be applicable only to my engagement team. So your audit quality is essential to maintain the confidence in the independent assurance provided by the auditor. It is the responsibility of the auditor to maintain high quality. SQC1 and SA 220 both deal with the quality control. SQC1 applies to the entire firm. SQC1 applies to the entire firm. However, SA 220 applies only to a particular audit engagement. Based upon quality control system of the firm established in accordance with the requirement of SQC, quality control policies pertaining to the engagement are decided by the team. Engagement partner of a team is responsible for the quality. So therefore, SA 220 is premised that the firm is subject to what? SQC1. So with this, we are done finally with our RTP of May 2024. But however, at the end, they have added a disclaimer. What is the disclaimer? That students are advised to refer to the RTP of paper 2, that is corporate and other laws, for academic updates relating to the company law and other chapters. So now there are certain topics of law which may also affect our portion. So for example, there are certain sections as if 143 and all which are applicable to audit as well. In fact, in the previous attempt, they had company audit sections, that is section 139 to 148, which was earlier part of audit, but now they have removed it. It is only part of law, but you never know, they may end up asking some questions based on those particular questions, sections here as well. So once you also please go through a law RTP and ensure you have covered all the relevant amendments, because you never know, they may not ask those amendments there in the portion of law, but they may end up asking those things here. So they may ask question based on of law in audit as well. They are hinting things here. So with this, we finally put an end to our discussion of RTP May 2024. I have already at the beginning of the video discussed what should be your approach. For example, what if you have a short of time, what are the questions in the RTP that you should go through? What is the relevant weightage as per the new scheme, which a lot of students are not sure. Thirdly, will there be correct or incorrect? So all the discussions we have done at the start, in case you have skipped the miss start, please make sure you see that particular part. Once again, all the best. See you sometime soon in season 2, that is CA final. All the best for examination. Thank you very much.